Hi, everyone. Welcome to our WealthTech Committee meeting. I'll just hold on I can see more people are just joining, some in the waiting room. So we'll just maybe wait for another 20 or 30 seconds. We'll let our panelists get settled. For those of you, I think most of you are on mute, but if you're not, that would be great if you could go on mute. And there'll be a Q&A session later on where you guys can unmute yourself and ask questions later on. Great. I can see, I think everybody who was in the waiting room has joined. Great turnout for today's session. So welcome everyone to the Hong Kong Fintech Association's WealthTech Committee event today. I'm Julie Chan. I'm one of the co-chairs of the WealthTech Committee, along with Neil Tan. For my other day job, I lead the Asset and Wealth Management Consulting team for PwC in Hong Kong. So for those of you who are new to the Fintech Association or WealthTech Committee, a very warm welcome. WealthTech Committee is one of 8 committees in the association, and as the name suggests, we focus on the opportunities of emerging tech in the digital transformation journey of the asset and wealth management industry. So we have a diverse member base, but we're always open to new members to bring new perspectives to our discussion. So we meet on a monthly basis on the first Wednesday of every month at this time, 6 p.m. So please do reach out to Neil or myself if you would like to find out more on how you can get involved. So we actually have an exciting and packed session for today. We're running our second panel in our GBA Wealth Management Connect series, which is headed up by one of our committee members, Wendy Wong. And we'll follow this panel session with a networking session, a bit like speed dating, as we call it. I think for those of you who have been to some of the Fintech Association events, we have been running this for some of our other committees. That would be sort of the last 15, 20 minutes of the meeting, and you'll be automatically assigned to a breakout room with one of the panelists or co-chairs for around about something like 5 to 6 minutes. So please do stay on for that. It is quite fun. It's very lighthearted. You don't necessarily need to, introduce yourself if you're shy, but it does give you an opportunity to, ask a few questions to the panelists and reflect on some of the discussion that will be taking place. Right. So let's get started on the panel session. I'm going to hand over to Wendy Wong for her to introduce herself, what the Wealth Management Connect series is about, and also the panelists for today. All right, over to you, Wendy.
Thank you, Julie. So a quick introduction about myself. If you guys already joined our first GBA Wealth Management Connect section, so I'm one of the lead on the WealthTech Committee, and very happy to drive this since early this year. At the same time, I'm also working for Allianz Global Investor as an asset managers, driving the digital wealth management business globally, but Asia always is in my heart. So that's why I would love to always keep connecting through the association and learning from all of the members and here as well. Since April, we have a first section about GBA because it's a hot topic. Everyone talk about it. It's big opportunities. And in the first section, we basically invited some of our speakers talk about what is the regulations framework, what the policy as a basic understanding, right? So step forward, this is the second panel discussion about this topic. And we want to deep dive into, as a FinTech association, right? How FinTech firm, right? No matter based in Hong Kong or even in mainland China, can help to create the value and even create use cases to help differentiate, right, and capture these GBA wealth management opportunities. So that's why we are so grateful today. We have our panelists today to sort of share their thoughts and even their practical experience of getting this opportunity. So we have Jason Tu, who is a co-founder and CEO of MioTech. Hi, Jason.
Hi, Wendy. Thanks for inviting me.
And then second panelist is Shih, who is the head of sales and marketing at AQUMON.
Hello.
Hi.
Thank you for invite.
And then we also have Teelie Chua, is a director of product planning and fixed income market from Hundsun.
Hi, everybody. Great to be here.
Good. Thanks for joining. And by the way, we want to make these interactions to be more like more fun, right? So if you already during the panel discussion have any thoughts or any questions, please do post your questions on the chat. So we may probably can also answer it during the panel discussion or maybe at the end of the Q&A. And then, so happy to share your thoughts. But just in recap, right? Since April till July right now, what are the update of this GBA Wealth Management Connect? Because we know that from May, there's a Chinese regulators post a more updated draft of these regulations, how it actually works. And just a quick recap here to let everyone got updated. So based on the new regulations, we learned that the qualified investors who can join this GBA Wealth Management Connect is relatively affluent segments, like roughly the monthly AUM balance have to be over 1 million RMB in the past 3 months, or their financial assets need to have a monthly balance over 2 million. So relatively, if you look at that, is the regulations more want to target this to open firstly to the affluent or more professional investors. And they need to have 2 years of investment experience to join that. And every qualified GBA residents can only open one GBA Wealth Management account as a starting point. In terms of the investment account opening, I think at the beginning, there's relatively restrictive on just an in-person account opening, but because of the COVID, there's somehow remote opening is possible for Chinese investors when they want to get access to the Hong Kong wealth management products, right? And in terms of the product type, there's relatively starting from a relatively conservative product first. So if this is like a product which is in the southbound investment, if it's a Hong Kong domicile fund within R1 to R3 risk level, based on the definition of the Chinese regulations, which means if it is money market fund, fixed income, or balance fund with some exposure to equity, that is sort of also part of the scheme. And the combined investment quota is around 150 billion RMB maximum. And in the past 2 months, there's also have some kind of associations done the survey to ask the consumers what are they expecting, right, from the GBA. And we found that like recently HSBC and AC Nelson, they done a survey saying 82% of the mainland investors are interested in this program. And Hong Kong Investment Fund Association also done a survey just last month. And there's somehow very interesting finding is most of the investor, if they want to invest, their return expectation is around 13% annual return. And the top favorite sector they want to invest through this program will be like new or renewable energy, biotech, or internet related. That is the top 3 sector they want to invest. And dividend payment will be one of the key important factors when they consider to invest, right, in this program. So just give a very brief context to everyone is this is sort of the appetite, right, and the segment that at the beginning, this scheme allowed to do, but our discussion will more also not just to focus on short term, but we're also looking at maybe it will open up for much broader investor type and much broader product, right? So that's where the fintech can come in. So I want to ask all our panelists, right? The first question is, as a fintech firm, right, that you are specializing, what are your current future service offering to capture this GBA wealth management space, right? If so, how do you see this opportunity in the long run? Maybe Teelie, do you want to share your thoughts first?
Yes, so I'm going to share 2 slides here, but before I do so, I'd just like to share a bit of background, right? There's one more colleague from Hundsun who's also in the meeting, whose name is Yang Zepin. So he's the business lead for the solution that we're actually already talking to banks in mainland China. So I'm representing the solution that's already in place in China, and I'll give you a background of how it works. Okay. Can you see my screen at the moment? Okay.
Yep.
So there are a couple of introductory slides already out there about Wealth Connect, right? So I'm not going to go to too much detail into what those are. However, to set the context for the solution that Hundsun is already speaking to banks with, I'm going to start off with this slide. Now, if you look at this one, it merely, on the left-hand side, it merely talks about the roles that a particular banking institution can take, whether it's actually a northbound or a southbound flow. Now, if you look at the wording, there's only 2 things that actually stand out, whether you are a distributor bank or a partner bank, right? So which emphasizes that in its core, Wealth Connect is a distribution or extension of a distribution business model, right? Now, why I'm actually focusing on that one is that I'm not sure if you're aware about Hundsun's business in China, but Hundsun is actually, predominantly in the fund and buy side segments of the capital markets industry in China. And to put into numbers, actually 85% of the buy side in China actually we have presence in 85% of the buy side in China, our solutions. Now, if you look at the right-hand side, right, if you look at it purely from a product distribution model, there's a couple of things that sets it apart. One is the product scope at the moment is controlled, and the use of capital, which means the access to participation is actually controlled as well. So it means that the key success factor essentially is just ensuring fast for the product flow and lowering the friction costs or transaction costs in getting the product to the investor. Which brings me to the solution that Hundsun provides, right? If you look at this one, what essentially it means is that at the top level, it emphasizes, you can call it as a value chain or a product flow from left to right, which is from the left-hand side, you have the fund companies who issue the product. And then in the right-hand side, you have the banking investors represented by what we refer to as a distribution bank. Now, where the Hundsun solution comes in is that it simplifies the flow of information, whether it's product or reporting needs or order management between the fund companies as well as the banking institutions. Now, how are we able to do that, right? There's already an existing solution that Hundsun, even before Wealth Connect, right, that Hundsun is already offering to what we refer to as subdivisions of banking operations, focusing on wealth management, right? And the main reason why it was an existing system is because of the presence of Hundsun on the fund company side. And if you look at this one, there are 2 small boxes there, which covers product issuance, as well as the transfer agent handling, which are both developed by Hundsun. And if you link it to the integrated wealth management platform, what are the core components there? You have product management, where we integrated the ability to control which types of products are allowed, depending on whether the scheme expands or reduces. Second is integrated order management for subscription and redemption, or actually purchases of specific wealth products. Investment account management. So there's a specific rule in Wealth Connect that actually indicates that you need to measure or monitor the use of funds and where it actually is invested in. So this one has a link to the actual banking account that is maintained in a system in the banking side. And we actually have a free flow of communication between the banking side system as well as the integrated wealth management platform. And more specifically, the clearing for subscription and redemption. For redemption itself, we also support real-time redemption through escrow account as well. and more importantly, the compliance and reporting needs, which are, how do you say, front and center in terms of ensuring that the type of products being sold is controlled and the use of capital is monitored as well. So this is a run through of the current solution that Hundsun is already talking to banking clients in mainland China, right? And if I were to summarize it, essentially these are the four key areas or four key functions, right? Product handling. What are the top products that you can sell? We are able to handle not just funds, but also not other wealth management products. But it's just at the moment there's a limit to fund products. You have the clearing for subscription redemption, order handling, as well as the regulatory reporting. So I'll stop here, Wendy. Essentially, I just gave a flavor in terms of where in the whole value chain of fund distribution the integrated wealth management platform sits in.
Thank you, Teelie. That's a very good sort of overview of how it's actually can operationalize, because there's also in Financial Times news before is talking about Hundsun actually having this integrated wealth management platform already enable the banks to do this cross-border investment. So it's good that to learn from you today how visualize, right? Actually, it works. Ken, from like as a robo-advisor, right? So how AQUMON see this opportunity? Because we also know that like AQUMON do have a B2B clients like banks in China as a partner, and you also do have a D2C channel. How you see this?
Thank you very much. Actually, Teelie took a lot of the words out of my mouth, but no worries. I just wanted to keep things simple, right? So I just have a few slides here, and I wanted to show one thing was, when I think about the Wealth Connect right now, I think for a lot of robo-advisors, as Wendy mentioned earlier, right now, clearly it's mainly mutual funds are authorized by the SFC that are more like low to medium risk. And so basically most robo-advisors have not launched their own mutual funds. So clearly that wipes most of us out in terms of direct offering, particularly in the initial phase. But I do feel like right now we have a number of B2B clients where we're already building the path, particularly thinking about the Wealth Connect in terms of mutual fund offerings for clients directly via the Wealth Connect. And also I think a big part of our firm right now, which was maybe a few years ago was a bit of a strange positioning because most people were thinking about more regional expansion. For us, it's more about connecting our GBA business with our Hong Kong business. I think that has been a very clear-cut direction for our firm. And to me, when I think about like robo-advisors right now, I think they're quite well positioned, truth be told, I think for a lot of GBA-related type offerings. Particularly when I think about two big pillars. The first pillar is thinking about how do we adequately protect our investors. And as you know, with a lot of robo-advisors, what we do is we analyze the client's background, their risk tolerance, before we offer low to medium risk, or maybe even some, I would say, a little bit more aggressive, but generally speaking, can be low to medium risk, diversified offerings for clients. And I think this actually fits really well when you think about at scale, how can we offer this either through a B2B partner or through a directly B2C, directly to clients. And the other thing, which the slide I wanted to show a little bit was thinking about, I think particularly thinking ahead, a big element is thinking about how can we increase the product variety. And so I think particularly this year on our B2C platform has actually been pretty hectic. With originally with us being much more similar to our overseas counterparts, offering the ETF portfolios, and then early in the year already started offering these I would say thematic stock portfolios. As you heard, some of us we did a Bitcoin smart portfolio, and then actually as of this week, we are launching a stock trading function for clients. So to me, when I think about it, I mean, there's a big reason why we're offering all these new legs is because, truth be told, as a pure traditional robo, I think it's not an easy sell, particularly here in Hong Kong and directly into the GBA area. And I think just to give you a little feedback, some of you may have heard me talk a little about the clients at AQUMON. And I think the clients that we currently serve is a wide range, but the app itself right now, I would say we service more like retail level clients. So the average client invests 120,000 Hong Kong dollars, so a little bit less than clearly the GBA minimum, but the range is actually quite wide, from 8,000 Hong Kong dollars all the way to 8 million Hong Kong dollars on the app itself. But we actually also service bigger clients for our asset management arm, which will be more like PI level type clients. But I want to mention this because particularly on the app itself, with all these new product offerings, one of the key things for us was we had a pretty big weakness a little while back, which was at the end of last year, I would say that 86% of all our app users only bought one product. Right. So earlier I mentioned that a key to longevity is actually expanding your products, your overall product offering. And actually by the end of June right now is that close to 50%, I think 46% of our clients have bought at least 2 products or more. And actually, I would say one client is up to like 12 products already. We only offer 16 products. So again, it's just thinking about how can we keep offering new opportunities for clients. And I think that's something that makes a lot of Hong Kong robos, particularly like us, actually quite unique to a lot of our overseas counterparts. And as I mentioned earlier, like our business right now, I would say is focused very much on the retail end, people who use the app, the institutional end, people who are right now focused on a lot of our B2B offerings, particularly here in Hong Kong, Greater Bay Area, and in directly in mainland China. And also we're opening up a new asset management arm, which we've been, I think, open for about half a year or so. And we've been seeing some good traction there as well. So again, it's just thinking about how can we just give ourselves more opportunities to be successful, given the fact that our participation in the GBA right now is a little bit more on the limited side. But I think long-term wise, or medium to long-term wise, I think there's a lot of opportunities for a lot of robos in Hong Kong, both for partnership and also for direct opportunities.
That's very well said, Ken. So I want to turn to Jason, because Jason, MioTech, from my understanding, is it's very focused on ESG, and ESG also is an increasingly a popular topic, right, in China, especially if it's focusing on private banking and affluent customer. So how you see this opportunity, and what is your view?
Yeah. First of all, thanks a lot, Wendy, for inviting me to this panel. I'm super honored. As you have already pointed out, MioTech is a financial data provider, and we're especially focused on the sustainability space. But having said that, I think sustainability is becoming an increasingly important topic in wealth management. To give you some of our perspectives, first of all, a very large portion of our hedge fund and private equity clients, for example, they tell us that they need to ramp up their sustainability investing efforts because their large individual LPs have mandated them to do so. And even when we talk about mass affluent, we've worked with a number of mutual funds, for example, in mainland China, to launch sustainability themed retail investment products. And they've been a huge success. There's definitely an increasing awareness of sustainability issues among the younger generation. And that translates to the future of wealth management products. Now talking about the opportunities in the Greater Bay Area, first of all, the Greater Bay Area also aims to be a green finance hub. Carbon exchange is being built, green bonds are being issued, lots of new things in the green finance space in Greater Bay Area as well. So I would say, well, at the same time, it also aims to be a wealth management hub. Why not just marry the two topics to the two goals, right? And on the other hand, I want to share with the audience that the Greater Bay Area has the youngest population in China. The whole country of China is aging. And the youngsters come to Shenzhen to work 996 to build their dreams. So the wealth management really, targets younger generation. The targeted younger generation is more receptive to sustainability themed investing. And I think I can share more in terms of some of our client examples in the latter part of our conversation. Thanks.
Okay, thanks, Jason. So this turns to the next questions that in my mind is, GBA, we talk a lot is mainland China, but actually it's two ways, right? They have southbound and they also have northbound investment. So how can you see as a fintech firm can help differentiate maybe for banks, if you're serving B2B client, or maybe as a D2C space, right? To these two types of investor, how you see they're different? And any specific use case or examples that you can share with us? Ken, do you want to start?
Yeah, sure, no problem. Truth be told, I think mainland clients, Hong Kong clients, a learning process every single day. I mean, for us right now, I would say mainly focused on the Hong Kong market. So mainly, I would say at this point. But truth be told, I think when the Wealth Management Connect opens up for us, it will be much more, I would say, initially more southbound focused. I think clearly we have also northbound opportunities, but truth be told, I think the focus of our firm, even though just think about from a human resources standpoint, is mainly focused here in terms of Hong Kong investment opportunities. I think at the end of the day, for example, what Jason mentioned quite earlier, I think was actually very, very true in the sense that you clearly need an offering that is clearly very mobile forward and cost effective, particularly for a lot of mainland clients. And I think with a lot of robo-advisors, a lot of digital offerings right now, we are well positioned to already offer this directly to the client. Now, naturally, we can also partner with a lot of banks. Like, for example, I think we partnered with China Resources Bank back in 2016 and launched the first robo-advisor in Southern China called Run Zhitou back then. And it's been running now for about 3 years. But actually the strategy itself has been running for close to 5, offering, I would say, mutual fund portfolios at 10,000 RMB for a lot of investors in the Greater Bay Area and in mainland China. But I think going ahead, I think one of the big things will be for us is thinking about how can we even just get a piece of the pie? Because I think right now, the robos that are in Hong Kong aren't exactly quite involved within the Greater Bay Area's Connect. And I think for us, it'll be sort of a look and feel to figure out how, when they actually loosen up the guidelines a little more, that we can actually get involved. Because this is something that I think right now is pretty much a look and feel type situation, and we're mainly working with a lot of B2B firms. But we are actually in Hong Kong and both in mainland China have our own started developing our own B2C business as well.
How about Jason? How do you see it?
Speaking from a sustainability perspective, MioTech serves both investors outside and inside of mainland China, and we've been providing financial information and sustainability or ESG information both to investors overseas to help them understand China better, and also to domestic clients to help them grasp or understand better about the ESG practices which are more mature overseas. But one thing I want to point out is that there's definitely a strong interest in southbound investments. There are, as there has always been historically, when people get rich, they start looking for investment opportunities, not only domestically, but also overseas to diversify. But I want to point out the fact that we've also seen a strong interest in deals in China. If you trust me, check out the stock market today and A shares versus Hong Kong. It tells a different story than most people would think. The trend that we've been witnessing is that, a lot of the affluent individuals in China are looking to diversify their investments overseas. They have not reduced their interest to invest domestically, but at the same time, a lot of our foreign customers, especially institutional clients, are looking through either Wealth Management Connect or other schemes to invest more in China. Let me take an example of not only the fixed income market, but also let's talk about the equity market. Just check out for example, Cato Group, the electric battery manufacturer. So the stock price has tripled in this year. It's the largest battery producer in terms of installed volume. So I think there are a lot of foreign asset managers and investment managers that we have served are snapping up deals in China as well. So I think it goes both ways.
Teelie, I think from Hundsun would be a different perspective to see these questions, right?
Yes. So I'm going to share a different angle to this question, right? If you saw from the diagram or the visualization that I shared a while ago, it's quite obvious that Hundsun plays more in the, how do you say, the kitchen and the distribution part, not necessarily in the banking space, right? You could see that most of the solutions that Hundsun provides would be on the sell side. The brokerages that have access to the markets, the institutional buy side who actually produces the actual wealth products, and we build the distribution network to reach the investors, right? Now, specifically around Wealth Connect, the problem that I personally see here is that there's still a bit of a limitation in terms of what the products could be invested in, right? And until that is expanded, there's a bit of a limitation in terms of what how it supports that that survey that you indicated a while ago, Wendy, in terms of the expected 13% return. Now, a bit about background about myself, right? Although I'm representing the solution that Wealth Connect, what they were serving for the Wealth Connect, I actually also work in the QD space, the QDII space. And William Berkshire was asking about specifically around how does it complement other investment routes, right? Even before Wealth Connect has gone live, I'll be very honest with you that there's already a lot of interest through other non-exchange routes to derive the returns that are expected in that survey. And Hundsun is actually present in this area. I'll give some examples with regard to the product types that they would involve in. You would have the likes of total return swaps that are actually being provided by Hong Kong institutions to institutional buy side in China. But also, you also have the product types for like accumulators, structured products, essentially. And where Hundsun plays and hopes to enable institutional players is providing the solutions that enable them to handle risk for these product types, as well as trade these product types and package them in a proper way so that the investors in mainland China can have access to them, right? So to summarize it, we view Wealth Connect as just one of the pipelines across many other pipelines that could be built in the future. I'll give an example, right? You have Stock Connect, which has always been there from the beginning. You have Bond Connect for bond investments. You have QDII, and then more recently, you have the the Orchid bonds that were issued in the Shanghai Free Trade Zone, which also gives investors access to markets in China. So where Hundsun plays it and hopes to differentiate players in this market is to get them access to these markets and to be able to manage the risk properly. So we're focused on these two types of solutions for the players that are coming into Hong Kong.
Okay. And I think some of the question, I just look at the chat right now, actually is quite reconciled with what I'm going to ask. Is there any key challenges, right? How to operationalize? I think there is some question, maybe Teelie already mentioned, like we'll just mention about how does the WMC compliant other investment route for the Chinese investor to invest overseas like QDII and MRF. And also, I think some other questions also involving how to do the reporting and certain format, right? This may be, Teelie, you want to answer it first because it seems more relevant to like how it's operationalized.
Yeah, so as we all know, the rules are actually still evolving. And one of the key things that Hundsun did, or actually let me put Wealth Connect aside, right? One of the key strengths of Hundsun in the mainland China market is that whether you're a buy side player or a sell side player, when any kind of new initiative happens in China, it's very different from overseas, wherein you have grassroots level innovation, wherein somebody will try something, another institution will try something, and then the market evolves. In China, it's a bit different. What usually happens is regulatorily driven. You would have a test bed or some kind of a controlled environment where ideas are put in and then tested out before it gets adopted to the overall market. So the approach and the flow or the steps that are carried out are quite different in mainland China. And one of the key strengths that Hundsun has is that at this early stage of the test bed or what you call a sandbox approach, Hundsun is already involved, right? So that is in the capital market space. Push that into the Wealth Connect space because the source of the products are actually from the capital market space. The same relationships that Hundsun has is actually applicable as well. And noting that at the moment rules are floating, the involvement that Hundsun has with the regulatory space makes sure that we are actually able to adapt in time for any rules that come in. And to be honest, the headcount of Hundsun in mainland China is around 6,000 to 7,000 people. So developing and adapting to the regulatory reports that come out is not really a problem in terms of effort-wise.
Okay. Ken and Jason, do you have something to add on the, have you seen any challenges when you execute, right? Certain type of use case to capture the GBA opportunities, or maybe from the industry observation?
Actually, I wanted to kind of echo what James wrote below, which was essentially what Wendy mentioned earlier about the expectation in terms of return expectation by clients. I mean, I think for all of us in this room who's been working in this industry for a while, 13% low to medium risk products, maybe this is kind of a gap. I mean, I think even on our end, like, you know, I think the product offerings that we offer are pretty diversified and safe, but I think clients at medium risk will be quite hard to actually reach these type of return offerings. But I personally don't actually think that even though returns may be a bit more on the lower end, that this would be considered a failure, or maybe demand would be quite low. I think there are actually quite a lot of ways around it. And actually for a lot of mainland investors, we see, particularly I think right now on our platform, I think about close to 7 to 8% of all our retail investors are either Hong Kong-based mainlanders, or let's just say they have mainlanders that have money here in Hong Kong. And I think for most of them, the feedback is they're just looking for ways to diversify their money, right? And looking at their behavior in terms of what exactly portfolios that they're buying into, I highly echo the idea is that, like, for example, high dividend portfolios are very, very popular. Clearly a lot of, I would say, overseas tech portfolios, even though tech has taken a beating with inflation, actually it is still our #1 seller by far. And I think there actually is still quite a lot of offerings that you can offer investors in terms of thematic type offerings, like even within Jason's space of ESG or sustainability. I think there is actually pretty strong demand in this. Maybe not on the retail level that we play in right now at the app, but definitely more on the affluent level, which I'm sure you know, Jason could provide probably more opinion on that.
I'll add one piece of information to the question posted by Jane De Blasio, right? Sorry, Mr. De Blasio. If you compare the different schemes by which mainland investors, of course, the focus right now is southbound, by which mainland investors can diversify. I agree with what Ken mentioned. It's all about diversification, more specifically on FX diversification, right? And asset diversification. Now, if you look at the different schemes, let's put into context Stock Connect, QDII, or any other connect. It entails you to transfer from cash to an asset class immediately before you actually get exposure to foreign markets. What's special about Wealth Connect is that it's actually a cash account. You actually get the cash account out to an account in Hong Kong before you actually convert it to an asset class. So what does that mean? It gives you more freedom in the future to determine where that cash could go to, as opposed to the other Connect schemes, which is you have to convert it immediately to an asset class before you get exposure to foreign markets. So the question now is whether it would be a failure. It really depends on the objective of the person who's participating in that scheme. Is the person really just looking for investment returns? Then maybe it's not. But if the person is looking for potential for optionality, like what can I use the cash for in the future? The cash is in Hong Kong. Let's say in the future it gets expanded to other activities. That's also something that the banking system with its in Hong Kong, which is very robust in terms of its controls, can ensure, which is something that the other Connect schemes cannot.
I just want to echo the other two panelists' points. First of all, I think definitely there's a gap between the two markets, the mainland market and outside of mainland. And I think the gap that we are trying to fill in as a provider of financial information is precisely on investor education. And back to James' point about return, expectations on return. I think there are two really important points that we, in the longer term, need to educate the investors, especially retail investors, so that they would have a better understanding and a more realistic expectation. First of all, is what is wealth management? I have to say that a lot of retail investors in mainland, in pursuit of a high return, they do not have a risk diversification or wealth management or portfolio concept. So that is important. What is wealth management, and why are you buying this, this wealth management product as compared to just putting all your money into one single stock or more risky products, right? And the second aspect is to educate the customers on, what you're investing in. And from that perspective, I think both the southbound and the northbound need to be educated, and they need to have better information. A lot of our clients, and trust me, a lot of northbound clients, not only in the Wealth Connect scheme, but other kind of schemes in general, even for institutional clients, they think there are huge opportunities in China, but other than that, they are not really well informed about the investment opportunities, so they have not dig deep enough to understand the investments that they're making. And on the other hand, for some of the northbound investors, still they're lagging behind. This year at the beginning, I remember Wendy mentioned about renewable energy being a very, one of the top investment themes. And there are other kind of thematic investment opportunities as well. And if honestly speaking, if you look at, for example, batteries, energy stocks, and anything related to energy has been quite a ride this year. It's going up like crazy. But a lot of the northbound investors, they have not, really dig deep enough, as I said, done enough research about what is going on in China. So investors also need to be informed about the market, about the investment opportunities. So back to the topic about how to operationalize from a data provider's perspective, market transparency and investor education. And in terms of how to invest, what is wealth management, and market transparency in terms of what you're really investing in is really important.
Thanks for all the sharing. I think that's all the insights. I also cannot just read it from the news. Just want to ask Julie and Neil, I know that there's some Q&A questions. Is that all covered, or anything maybe I missed out? So maybe we can start to take it.
I think you covered them all. I mean, maybe I think one of the early questions of, just to add on, how does Wealth Management Connect scheme complement other investment routes? Just to answer that directly, how it compares to QDII and MFR is, I mean, it's aimed at different investors. I think most of you mentioned earlier, I think maybe it was you, Teelie, that QDII is aimed at obviously the institutional investors, right? Whereas Wealth Management Connect is at the retail level. The second thing then, compared to MFR, mutual fund recognition, is that's open to all of China, whereas Wealth Management Connect scheme is going to be only available for the investors in the GBA region. So I think that's quite a good way to sort of see. I think that's a good question in terms of it does complement. It's not overlapping, I would say. But you're right, the opportunities are very vast in terms of expanding on this retail base. That was the only thing I wanted to add. I think we broadly echoed most of the other questions. So maybe we let some final thoughts from the panelists, Wendy, and then we can move into the networking session.
Yep, let's take a quick one about the final thoughts. So, Jason, you want to start first?
So the question was about my final thoughts.
Mm-hmm.
Well, I think overall speaking, I'm really glad to see that the Hong Kong market is getting more integrated into the Greater Bay Area concept. And as I repeatedly said in a panel, as a data provider from information providers perspective, there's a lot that needs to be done in terms of increasing the market transparency, and also in terms of investor education, that we can all work together to foster this scheme. And specifically in terms of sustainability, I think sustainability is really an uptrending investment topic and investment theme. And I'm just really looking forward to seeing global money being more integrated into the China market, and also the China money being more integrated into the global market, so we can all see a better practice in terms of sustainability and more interest in that. Thanks.
Thank you. Ken?
Maybe just two final thoughts. First, actually, I thought Jason's takeaway earlier about financial education, because we face retail investors every single day. And there's a reason why we offer stock trading now, because the education, although we've been doing that for multiple years, important. Clearly, I think the amount of resistance that we have on actually the retail investor level to talk about global asset allocation and like wealth management is something that's going to take much longer in terms of time, in terms of really connect with them in that regard. So I think there is an element of education that all of us as fintechs need to continue to do to drive adoption. But on some level, I think what Jay mentioned there. Yes, that is part of the deal, but the other part I think is very heavily focused on distribution. And also earlier, echoing the point from Teelie, was when I just think about mainland investors and their return expectations, if they were just chasing returns, truth be told, I think if you were just investing in the A-share market, you probably had pretty decent returns these past few years. I don't think you would necessarily come to Hong Kong to chase more returns. Actually, so I think the diversification element is probably one of the top priorities for most mainland investors that we see on our level. And so I think particularly for robo-advisors right now, I think they're relatively well positioned, both in terms of faster ways for clients to actually, I would say, onboard, offer very tailored solutions that are risk managed for clients. And I think also in terms of the product expansion right now is very quick, that actually meet the very mobile forward and cost sensitive needs of more mainland investors that are looking for southbound type opportunities.
Thank you. Teelie?
Just 2 points that I wanted to add in terms of how this could potentially evolve. If you look at the main characteristics of this particular Wealth Connect program, there are 2 main controls, right? One is the type of asset class that you can invest in. The second is the limit in terms of how much you can put in the program. And if you look at the spirit of these 2 rules, the first one would more hinge towards or more lean towards system stability or systemic stability, which is part of what regulators are worried about anything new, right? And the second one is more worried about, I guess, source of funds and AML, right? Now, my view is that maybe we're focusing too much on this part, in terms of the asset class. But the point is, if, for example, if it goes live and it's actually stable, and we can actually ensure that there's no blow up in terms of risks in the market, then this one would obviously go down. Or we would have some kind of technology solution to ensure risk control is present. But this part, the part about AML and source of funds, I think will be the part wherein it becomes revolutionary, when it's what sets Wealth Connect apart. As I mentioned a while ago, QDII and the others, you have to convert to an asset class before you get exposure to foreign markets. This one is cash. You actually get cash legally to a foreign entity. Okay, I probably have to be careful there. You actually get cash legally into Hong Kong and you're free to do whatever you want with it. So my point is this the start of open capital flows? And one thing I didn't share in the diagram earlier is that I'm not sure if you're aware, but the way money is transferred from China to Hong Kong is through renminbi, through a CIPS. I'm pretty sure you know that already, but my point is it's not through SWIFT. And this is actually specific design by the mainland authority to monitor, actually to control the flow of renminbi from China to Hong Kong. So is this the key for Wealth Connect? In a sense that once I get the flow of cash legally into Hong Kong, then I can actually invest in whatever assets I can. It's more about that, I think. I think give it maybe 3 years, the asset class question might come down. Then it's really the question about source of funds and AML. My personal view.
Thank you for all of the panelists' perspective. It's helped to sort of think even further on how the Wealth Management Connect can evolve, right? That's a very interesting topic. We hope that we will continue these conversations in this series later on. So Julie and Neil, I think back to you to turn to the breakout section.
Great, thank you, Wendy. Thank you, Teelie, Ken, and Jason for a great panel and sharing your insights. No, I think we've definitely no disrespect to our first panelist series, but I thought this one we managed to get to a lot of detail and sharing of the insights. So I look forward then to our next series.